Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's talk about what's happening, what is going on with this stock really just in general. And yeah, all that stuff as usual. So if you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice and I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for just $2.99 a month. You get access to all my intraday updates, thoughts, posts, etc. on Tesla, pretty much as it's moving. Sometimes I sprinkle in another stock or two, but yeah, if you're interested, again, the link is down below. But with all that being said and done, let's jump into it as I put this in my other monitor because I kind of like to look at this to make sure I don't forget any information. But first and foremost, I want to talk about this chart first because, so I can just close it after and we'll focus on the main one, if you will. But here, there's two things to look at, right? Bullish and bearish. Let's talk about the more bullish one first on the 15-minute chart. So first, on the more bullish side, we have a potential inverted head and shoulders pattern setting up. Now, obviously, there's a lot more work to be done. Excuse me. There's a lot more work to be done in order to really set this pattern up. But the way it's being set up right now is potentially an inverted head and shoulders pattern, which of course is a bullish pattern, a bullish reversal pattern, right? Where essentially we have the left shoulder here, this right here movement today, maybe even tomorrow is the head, followed by potentially the right shoulder setting up right over here, which will be pretty much in the very high 230s, low 240s, right? And of course, if we break above pretty much 241.5 to 242 in that general range, it should trigger this pattern, and that should bring us back up all the way closer to about $250 per share, right? Of course, give or take, not exactly, but just the idea, right? That's kind of what that sets up. Unfortunately, the thing that's kind of interesting here is the fact that this potentially bullish inverted head and shoulders pattern, assuming it does happen, will just bring us right into a bearish looking head and shoulders potential pattern here, where of course, as you can see here, it's also a much larger one. So if this one does play out, there will be substantially more of a move that will be created upon activation, if that makes sense. But in other words, or rather, we have the left shoulder here. We have the obviously head over here that we had not that long ago, and now potentially, like I said, setting up the right shoulder. Again, in my eyes, this can go as high as the 250s and still be completely valid. If we start breaching the 250s and we start going, well into 250s, especially like 255-ish, let's say, that's when this pattern, in my eyes at least, will start to fall apart. The bearish side of it, of course. But that's what I'm looking at it right now. So essentially, small inverted head and shoulders pattern that can potentially be setting up as we speak, essentially, right? Which can potentially take another, honestly, maybe even this week really to play out, maybe early next week. But then from there, again, can pretty much bring us right back into the right shoulder and start creating the right shoulder of the bearish version of the head and shoulders pattern, which again, if this plays out and we do break this one and break essentially below 230 to trigger this one, most likely will bring us back down to about 210s, give or take, of course, 215, 210, maybe even 200, right? But that general low 200s range is where this would bring us back if we break below 200 or 230. Very crucial level to me, 230. It's also where the 200-day moving average is. But that's the main thing I want to talk about here, right? Small bullish head and pattern, larger bearish head and shoulders pattern. Now, let's talk about this. So first and foremost, Tesla is obviously down. I forgot to mention about 2.5% almost on the day, which compared to the market is kind of flat. We'll just say SPY down 0.2, QQ up, 0.2. Kind of equalizes itself out there, but Tesla, of course, with the once again at this point pretty usual underperformance, right? Which of course sucks. But let's talk about the daily chart first. So there's a lot of things to talk about. Let's talk about the good and the bad. The good news, right? On the daily, at least. The good news is that we are, of course, still bouncing off of this retest of this bull flag, right? We're still very much retesting it. We're still holding above it. Obviously, it's looking kind of dire in certain times. And today we did breach, you can see, into the bull flag. So, we bounced, which is good. But, it's thin ice. It's absolutely, we're definitely dancing on thin ice. The one thing I don't like here is the fact that the RSI did make a lower low on today's move, which is just following the chart. But nonetheless, to me, it still shows that there's still some weakness here. This isn't like super powerful of a move just yet, or there's no like very obvious bullish reversal structure on the daily, at least, that's still setting up to me. That's telling me that Tesla's ready to finally rally, right? Especially with the RSI looking like this. The MACD is still looking bearish. The only good thing, quote unquote, here is the fact that the stochastic momentum indicator is at the lows, right? If we zoom out and take a look at it at a much more kind of longer time frame, I'll make sure I'm not blocking anything, and I am not. So I'll go like this. Right, you can compare it with everything else, right? And pretty much every time the stochastic momentum indicator has went down to pretty much roughly, give or take, these levels that we are at right now, we ultimately found some bottom and we ended up getting a bounce. I'll show you another, not really a new indicator, but one I don't talk about often because I wait for extremes, but we're actually at an extreme right now potentially. So I'll show that very, very soon, right after I finish talking about this, because I also want to mention the fact that we are, of course, losing moving averages pretty much day by day, right? We lost the 21 EMA about a week ago. Then we lost a 100-day moving average, I think late last week, I believe it was, on this candle right here, right? So we're losing these moving averages one by one. And today we pretty much lost the 50-day moving average. Obviously, we are closing pretty much within $1 of it, so we can easily recapture it tomorrow. It's hardly a move required to recapture. Like, even if we were to just open up exactly at this level tomorrow, it would require a move of like less than 0.5% to recapture. So it's not a lot of work to do, but nonetheless, technically still lost it, right? It's not ideal, right? It's not great news, right? It's obviously not bullish. However, with that being said, we are still holding above arguably one of the most important moving averages, being the 200 daily moving average, which of course is this green line right here that we obviously didn't touch, but we got pretty darn close to it, as people are probably buying as we start approaching it, right? Very important level to protect, as of course it is just a very important moving indicator, or moving average rather. But it's also pretty much right around that 230 level that we just talked about that can potentially trigger this head and shoulders pattern. Now, again, even though this head and shoulders pattern that we just talked about is obviously still pretty much in the process of forming, which again, we can still go as high as about 250 even, right? And still, in my opinion, it's pretty valid. We haven't really started truly forming the right. This right shoulder is non-existent compared to this one, right? So there's a lot more work to be done to really form it, in my opinion. So in my opinion, I wouldn't be surprised if we just bounce up and down between like the low 230s to like maybe in the mid 240s, pretty much until earnings, honestly, which is in about what, 2 weeks or something like that, right? It's I believe it's I think the 24th or something like that. I can't remember exactly the dates at, but I believe it's somewhere around there. Let me go ahead and put this up right here, and it's going to be, yeah, the 24th. So there's a lot of time before that happens, but I wouldn't be surprised if we essentially just go sideways, just really bounce up and down between pretty much this low 230s to mid to maybe high 240s range up until earnings. We have CPI coming out in a couple of days on Thursday. Maybe that'll bring us up or something like that. Who knows what that's going to do? But again, I personally wouldn't be surprised if we essentially just go sideways until earnings, and then that pretty much dictates what happens next, right? As earnings tends to usually do. Again, there's just an example with Netflix, as I always like to bring this one up. Where is Netflix on this thing right here, right? So remember what happens to Netflix? Had a, it looked super bearish, like it looked horrendous, like it looked really bad here. Like this did not look bullish. But earnings came about, and then it had an absolutely phenomenal reversal, right? I'm not saying that'll happen with Tesla, but my point is just the fact that earnings can, of course, move a stock for better or for worse by a pretty substantial amount, and that might be what we're waiting for Tesla. So just keep that in mind as well. Now, the thing I want to talk about that's kind of an indicator I don't bring up very often, but I think, once it reaches to certain extreme levels, it's important to pay attention to, is of course going to be the TW pivot. So this is a pretty interesting one. I don't bring this one up often, like I said, but when I do want to talk about it, or when I do start eyeballing it, usually it's for a reason. So let's take a zoom out over here first and take a look at, it's quote unquote, historical performance. So it's a pretty simple indicator. When the bars are going all the way up like this in red, that means that we're approaching a top. The more bars there are and the more quote unquote, red they are essentially, and the taller they are, the more of a potential top signal that is. For instance, we can take a look at this super duper top signal, right? Again, it doesn't mean it's going to happen like right this very moment. It just means that we're pretty darn close to one. So here, a lot of red, and then we even had the hollow bar. That's like the final form, if you will, right? Where essentially we ended up moving all the way up to somewhere around this kind of 260s range, and we did get a bit of a drawdown all the way down to about the 240s, right? That signaled it, right? And then we had, of course, and we ended up starting to at least get into oversold territory, right? But that signified a potential bottom there. Another one here, right? We pretty much were at, once again, not that long ago, about 266 over here. We had, of course, a lot of red bars, pretty high up as well, one away from the final form, which is that hollow background. And of course, massive fall. This was just before earnings, right? On the flip side, we had, a lot of the blue bars. When the blue bars are this much, right, or this large, and especially if we get the hollow blue bar like you see all the way here on the left, same idea. It tells us that, we're probably getting pretty close, if not at a potential bottom on the daily. Same concept here, right? You can see pretty much the exact same bars that we're at right now all the way back here. Now, obviously, it wasn't perfect, right? It told us the bottom was somewhere around this kind of 209 level. We obviously went down a little bit lower to 193, right? But it was pretty darn close, right? Same over here, right? We ended up coming down the same level of blue bars that we're at right now. It told us that the bottom is going to be somewhere around this 239 level, and it was, because we ended up rallying to 265 pretty much right after that, right? Same concept as many times over here. The only times it was a little more inaccurate was pretty much during this absolutely astronomical sell-off, which of course was when Elon was selling. So that, was some pretty substantial pressure that's hard to predict for any indicator, really. But, it's pretty darn good. The point is that, it's pretty good at figuring out these kind of things, right? And, we're pretty much at it right now. As you can see, as I zoom back into where we are currently sitting at, right? Again, retesting the bull flag, holding the 200-day moving average. We are slowly losing other moving averages that I just talked about, which isn't ideal. Obviously, I'm not saying that's good. That's obviously not good. But this indicator is once again giving us the same signals as it did back then. Obviously, this doesn't mean that it has to bounce literally right here, right now, from this very moment. It can, but it's giving us an indication that we're pretty close, at least in theory, to a potential bottom, right? Maybe we'll go a little bit lower. Maybe we'll go down to actually 230. Maybe we'll actually tap the 200-day moving average sometime, maybe even tomorrow or Thursday or just sometime this week. But we're pretty darn close to it, right? We're pretty darn close to it. And, usually when you get these kind of pretty aggressive sell-offs like this, you get a pretty substantial correction as well in the other direction. So, take it as you will. That's kind of what this usually tells me. So I don't know. I like it. I think it's great. It did a phenomenal job, which I missed, which I'm really sad about, but it did a phenomenal job on the weekly as well, pretty recently, where it told us the top was pretty much right around this weekly candle. We had that enter the 260s range, right? Same concept. You can see the bar over here, even over here too, same concept, red bar, and even had the hollow background. That's usually like the final form, if you will. That's like, okay, be really careful here. In this case, for being a top, and look what happened the day after. Same thing over here on the weekly, right? It was, again, a little bit early on this because, this was Elon selling, but same concept, it's giving us a pretty decent idea. The fact that we're closing near our bottom. Obviously, the weekly still has a lot more work to do, but the daily is telling us that a potential bottom is close. So keep that in mind. So those are the main things I'm looking at right now. Now, the final thing I'll really briefly touch is going to be the squeeze indicator. So I want to bring this away. You got an idea of that. The squeeze indicator is giving some conflicting results here. So on the daily, it is showing a green circle, implying that the squeeze direction has been picked with the bar going downwards, which implies that the direction that the squeeze most likely will, quote unquote, squeeze is to the downside. However, the weekly has not picked a direction. It's still red circles. It hasn't picked any direction just yet. So it's pretty much conflicting with what the daily is showing. So not really sure how I feel about this one right now. Personally, I'm eyeballing this one a little bit more. Maybe I'm biased, I'm not sure, but I'm enjoying, I like the TW pivot more because this to me, whenever it does reach these, again, kind of extreme levels of being overbought or oversold, it's pretty good at predicting that, we're pretty close to a top or bottom around this general location. Obviously, take it with a grain of salt. It can be wrong, but just something to note as well. So a lot of things to pay attention to, a lot of contradicting factors, a lot of like limbo stuff, like good stuff, bad stuff, bearish, bullish, a lot of really confusing signals here. Pretty disappointing with Tesla's performance overall today, I will admit, because we did have a beautiful breakout yesterday, like I talked about, right? We had a nice little potential, downward wedge that we ended up breaking out. Beautiful follow through, broke into 240s, even closed in 240s, just for today to be an absolutely just really strange red day that just kind of feels like it came out of nowhere. And the final thing I forgot to mention is on the 65-minute chart, I'm still seeing a very, very textbook, very obvious bullish divergence, where essentially, as we're obviously making lower lows, the RSI is doing the literal opposite pretty much ever since here, making higher lows. So probably one of the most textbook looking bullish divergences. One of my personal favorite things to look for. I love looking for bullish or bearish divergences. One of my favorite things to do and to trade. One of my most successful patterns that I see. And this to me, again, could be wrong. Things can change. But as it stands right here, right now, looks very textbook, looks very clean, just looks like a very standard bullish divergence, which, as I'm sure you can guess by the name, is obviously looking for a potential bullish reversal on its way. And that's, I think, what we'll be getting. And we did obviously have a lot of doji candles here on the 65-minute chart, right? Where we just had a lot of, bulls and bears battling it out. But you can see the bulls seemingly won towards the end of the day, as we did, at least within this little time frame of trading, end up closing towards the high part of this little zone over here that we found ourselves in. Pretty much just tug of warring back and forth between bulls and bears. So a lot of mixed signals, a lot of really confusing things. But ultimately, what I see from here is the fact that I am still more bullish than bearish in these levels. If we start breaking 230, that's when I probably will start flipping bearish. And that's when I think the bullish thesis really starts to weaken. But as it stands right here, I did buy the dip. I am still holding. And, I think it's looking better than it is worse, at least as it stands right at this very moment, as long as we pretty much maintain above 230. 230 is pretty much my stop loss. But yeah, that's the main thing I'm looking at. A bit of a long video today, lots to discuss. Tesla's performance has been definitely disappointing. I will admit, absolutely disappointing. It's been lagging the market. The market. You have stocks like NVIDIA just rocketing to all-time highs. Phenomenal performance, and it feels like right now, at least for now, NVIDIA is almost the new Tesla, doing what Tesla used to do, while Tesla's just kind of not doing a whole lot. Let's just say that. But a lot of bearishness on Tesla lately, which usually when the sentiment is bad, it's a good time to buy. We'll see if that's the case here. But all in all, thanks for watching, and as usual, I'll see you tomorrow. Peace.